Hello traders, James Stanley with StoneX and FOREX.com. Wanted to look at the Japanese yen as we're going into some pretty important rate decisions. We have the European Central Bank tomorrow morning, but really it's the Fed and BOJ next week that I think is really pertinent here. Want to look at this across a few different pairs, dollar yen, euro yen, and pound yen. First, need to look at a risk disclaimer. I'm going to leave this up for 15 seconds up front, 30 seconds on the back, 45 seconds on the back, and it will be in the description field of this video. Please review that, pause the video, take more time to review that if you so need. I will be on the other side and we'll start looking at charts. All right, so dollar yen has been pretty much my favorite long USD pair for, well, more than just this year, but specifically this year. I've been looking at this trend, following this trend, working with this trend now since it started back in 2021 and really started to heat up in 2022. We're at fresh 40-year highs. I have little reason to question this now. The challenge that I have, and I share this pretty openly in webinars, is chasing breakouts. I don't like to chase fresh breakouts. If anything, it's very much like what I was lining up last week, where I look for counter trend criteria to try to create a pullback with which I could then look for higher low support. And we had a pretty perfect setup around that with the US CPI report last Tuesday right in here. And you can see that brought a pullback that buyers responded to fairly well. That was PPI a day later, higher low support, and then right up into a fresh high. The challenge now is longer term in nature, and it's that 165 level. I think if we get close to 165, that's where we're going to hear the ministry, the finance minister in Japan threatening intervention again. They might even intervene on a test above 165 if it happens quickly. I don't know. I don't think that it makes sense for them to intervene, but I think they're really cautious of dollar yen going into hockey stick mode because Japanese yields are already really high. And if we get inflation expectations feeding into that, we could see yields go higher. And that's a whole conundrum that they want to try to avoid. I think ideally, for both the Bank of Japan and the finance minister, is this is a grindy kind of upward trend. But the next level up is 165. If we get there, especially get there quickly, I'm fully expecting to get some type of threat. But from that threat, I'm going to look at that as opportunistic. I'm going to look at that for a pullback. I'm going to look at that as something that could possibly be bid for another higher high eventually. But 165 is a pretty major spot on the path forward. That said, we have the possibility of pullback with where we're at now. With these fresh highs, you can see where prices are starting to show a bit of stall, like on this 4-hour. This was the setup I looked at in the webinar yesterday. I was looking at that level at 162.84 for a pullback. That came into play pretty quickly and led to a rally right back up inside of that 163 level. It would not surprise me to see longs pairing positions here. For that same reason that I just shared, we're close to 165. There's the fear that maybe they're going to say something, maybe they're going to do something. Perhaps not the area to try to push the envelope. The fact that we have the Fed next week, I think, presents an interesting wrinkle into that mix, because it was the June FOMC rate decision that really started to propel this thing. That's what ultimately led to the breakout above that 161.95 level. And I mean, this is the sustenance really to the 160 breakout that was, still kind of in process through most of June. But a more hawkish Fed, I think, does present that backdrop with which there could be dollar advantage against the yen. We're just not there yet. But for pullbacks, if we do get that scenario, 162.50 is my closest nearby zone that hasn't come into play yet, since showing us some pretty clean resistance. Below that 161.95, I think it still matters. It was the level that came in after CPI, after PPI, pretty well worn as resistance and support, but I can still use it if it gets down there for another test. If we get below there, okay, then I'm going to associate that with some bigger picture profit taking ahead of those central bank meetings next week, and that's where I start to look for a 160, 165, or maybe even like a 161, 27-ish type of area. But, realistically, I'm not going to consider this trend as being over until we get a closed body break through somewhere in this zone, ideally the bottom of the zone, 158.88 up to 160. Really big spot, really big price. The bull pennant so far has continued, and it's the area where I try not to overthink it. The bull pennant has continued, looking for pullbacks to work with higher low support. That said, kind of like I'd worked with a little earlier in the year, when we do get these episodes of dollar weakness that could possibly produce some counter trend near term moves, that yen weakness could be plotted nicely elsewhere. Like we have the European Central Bank rate decision tomorrow. I'm not expecting the ECB to do anything tangible, but it would not surprise me to hear Lagarde, try to poke the bear towards the possibility of a rate hike, a more near-term rate hike. Problem being, it's a similar proposition as the Bank of Japan, right? They don't want to hike themselves into choking off growth. Euro yen, the challenge right now is that we're pretty much near range resistance, around that 186 and a third ish area. But if we could get a pullback in there, like let's say we go into tomorrow and Lagarde doesn't poke that bear, and she instead sounds somewhat passive and maybe a little more dovish than what markets are looking for. But 185 is a key area of support potential. And then this zone right down here, this was the same zone I was looking at before I went on paternity leave a couple of months ago. And you can see how nicely that came in early May as support. Beautiful zone of resistance turn support that became reused. But if we get down there, that's what I'm looking at, is that kind of that optimum area of range support. Break of 182, that's where things begin to shift. Break of 180, that's when the trend is done and cooked. So that's where I got to start to shift the math a little bit. But we're not there yet. We're at range resistance. I want to see if I can get something a little closer to range support, and then that's something that I think could possibly play. The pair I like a little bit better for yen weakness, and have for a little while now, is the British pound. This plays in nicely with my dollar analysis. As I've been looking for yen, dollar strength against the yen, I've also been looking for dollar weakness against the British pound. And case in point, pound yen has just flexed up to a fresh, I believe we were at like an 18-year high. Yeah, it's an 18-year high up here. Levels we haven't traded at since January of 08. But the 764 retracement of the 07 to 11 sell-off is what ultimately has so far helped to cap the move. That's right around the 220 handle. You go down shorter term, and you can see where that really strong breakout took hold last week until that price came into play. There's now been 4, technically 5 consecutive red days. Considering today's not closed yet, so that could change. But what I like here is, if you look at this, the daily, I think, illustrates this very cleanly, very clearly, where it looks as though it's trying to bottom. You can see the underside of these wicks right at that 50% mark. 50% is not a fib level. It's just a halfway point, but it often gets in that conversation with Fibonacci because it's on most charting packages. But you can see how nicely that played, where set the low, sellers took their shot here yesterday, thwarted. We ended up with a doji, and so far today it's a higher low. I mean, you can almost see where we have the early stages of possible capitulation on the pullback. Not quite a rounded bottom, but similar tonalities of such. Go down to a 4-hour. And that also plays through pretty cleanly, but you also see that line in the sand that we need to see taken out before we could say that bulls are starting to take control here. That's a 218.41. We get that, we could start to say we have a higher high to go along with a higher low, and then that's something that starts to look more and more conducive for turn potential. But this one, technically speaking, to me looks a bit cleaner than what we have in dollar yen at the moment, given how stretched dollar yen is, how far away we are from any nearby supports. But this is the one that I think is perhaps even a touch more attractive for yen weakness right now. But that, my friends, is what I'm looking at for today. That's what I'm looking at in the Japanese yen. I will update this again next week before the BOJ rate decision. But as always, thank you for your time and happy trading, ladies and gentlemen.